I-V-M.
Hey, wait a minute. It's me. Here? I'm here. Okay. I'm here, Amit.
You do the hey.
I'm doing the hey. Welcome to episode 99 of Shunya 1. I cannot believe it's happening. We're rolling into the triple digits.
It's going to happen next week.
Yes, and of course, we missed you on the last episode. I think you weren't there.
I think I missed maybe 2 of the last 3 episodes.
Yes, I know.
But no, I had a good trip to the US. I went and did some Google podcast creator thingies, and I met some other people in the podcasting space, and it was a good trip.
Absolutely. Yeah. How is podcast doing in the rest of the world?
Well, in the rest of the world, it's interesting, right? So actually, I met a bunch of people who do podcasts out of Jordan, who do podcasts out of Brazil, and who do podcasts for Latin America, and all of them are struggling in the same ways that we are with the same kinds of issues. Advertisers, please come on board. Same kind of problems, but. The ecosystem just generally worldwide, I think, is quite interesting. There's a lot of really cool stuff happening. There's a lot of, the Google Podcast Creator Program had some really, really interesting things over there. I met some people at some of the other big networks, and I was talking to them about their plans, and there's some really cool stuff that's coming down the pike from some of the bigger networks in the world.
Nice. It'll be interesting to hear that, and let's hope they also listen to Shunya 1 someday.
Well, I kind of pitched it hard.
Of course. Of course. I would expect nothing less.
Of course.
But coming back to today's episode, and of course a quick recap on last week's, I had a fun recording with Ridraj.
I know, I heard it. It sounded really fun. It's an interesting company, Riddler. I think they do really cool stuff. Draftline became Riddler, which I think is...
and now they are part of the Ola team. They're doing some interesting things there. It's good to see that he's, cracked into this ecosystem. But of course, there's a lot to do. We don't know where it'll go. We don't know what kind of business products will come out of him. So we are looking forward to what Ola is trying to do in so many things, right? I mean, now I think Ola is in everything. Yeah. But funnily today, we are actually going to be talking to someone who has actually seen the early stages of Brijraj's journey.
Oh, really?
Because the person we are going to be talking to was actually an investor in the early Riddler.
Oh, really? Okay.
Yeah, so maybe we'll have some follow-on questions for Brijraj in a bit. So just to introduce our guest today, we are of course talking to Jitendra Gupta, the founder of Citrus Pay, and then part of PayU India, which acquired his company, and of course angel investor extraordinaire, because apparently he's, I think, the most luckiest person with a bunch of investments that he's done. So we're going to jump right into the conversation with him right in a bit.
All right.
All right, welcome to the show. I'm here with Jitendra Gupta, the founder of Citrus Pay, and of course now the managing director of PayU India. Welcome to the show, Jitendra.
Hi, thank you, Shiladitya.
And thank you for finally making the walkover from your office to our studio, humble little studio.
I think it was literally 5 blocks away.
Yeah, that's so great. And of course, I have been, I think, very persistent. Thank you for not totally ignoring me when I've been asking you to come over to do this podcast.
The most persistent guy I have ever met.
Thank you. Good. I have some founderness with me.
No, also.
Exactly.
So founders have to sell, I guess.
Exactly. Yeah. So that whole founder heritage and now sales heritage is obviously sort of rubbing off, even in getting our guests to the podcast. But thank you so much for being here. And of course, I just did a introduction about what I think you have been most well known for, and of course that is obviously Citrus Pay, and then the entire acquisition by PayU, and of course personally for yourself also, you've been part of a lot of other very interesting startups in India, and I think now also outside of India. So Why don't you tell us a little bit about your journey and of course how all of this came to be?
Sure. So first of all, thanks for inviting me for this podcast. I think this is like my first podcast, so definitely a bit nervous.
Oh no.
That being said, just to give a quick intro, I am a Jaipur boy. I was born and brought up there. I did my schooling there, and I had come to Mumbai once during my 12th standard, and this is the time I was like, wow, what a big city. I got really fascinated by Mumbai, and I went back home and I told my parents that, my college, I want to do it only from Mumbai, nowhere else.
Wow.
And they're like, why? What happened? Like, what did you see there? I'm like, nothing, but it's just that I love the city. So that was like love at first sight. And so I fought with my parents to come to Mumbai, and they gave me only one condition, that if you get to have an admit in a hostel, and so get a admit in a college which is hostel, otherwise we are not sending you there. And as the luck would have it, so I applied only in one college, Sydenham College, and my first list, my name was not there. Second list, my name was not there. Last list, I booked my tickets back to Jaipur. My name was there in the second last.
Wow.
And that's how my Mumbai journey started way back in 99. Did my college, did my CA, and post that I joined ICICI Bank, and that was the most fascinating journey I had. I worked there for 7 years, and after working for 7 years, I realized that this is not what I want to do for life. By the way, within that 7 years, I was like always, everybody wants to become entrepreneur, and I was always being a Marwari guy. I was like, anyway, I'm tuned to do business. I'm not tuned to do a job.
Right.
So I must have made some like 30, 40 random ideas, business plans, used to discuss with my friends. Everybody used to laugh. And, I had got married by then, and I used to come home, discuss with my wife, and my wife was like, are you crazy? This is not going to work. Are you crazy? This is not going to work. So I was like, whatever I tell people, this doesn't work. So when I'm going to start and how I'm going to start. So one fine day, I just came home and I said, I'm quitting. And they said, what's the idea now? I said, I have no idea this time. I'm just quitting. And I just simply quit. Wow. And so I was at home for almost a year before I started Citrus. Now, how the Citrus journey started is... So during those days, all those free dinner cocktail parties, whosoever by mistake sent to invite, you used to go because you were free at home. So it was some change. So one of the PE fund invited me for their annual dinner cocktail party, and I met Amrish there. Amrish, my partner in Citrus. I knew him since ICSA days, and he said, hey Jiten, what are you doing? I said, frankly, I don't know. But he said, why don't you join First Data? He was CEO of First Data India. I said, no, I don't want to join First Data for sure. So either I want to start or I will go to US for studying. Fortunately, I had taken GMAT, and I had got admission into INSEAD, Singapore. And I was like, I've got this admission into INSEAD, so maybe I'll go there. And then he's like, are you crazy? Who wants to waste 1 year studying again? Why don't you start something and I'll fund it? I'm like, are you sure you will fund it? Yeah. He's saying, yeah, I have so much confidence in you, I'll fund it, whatever you do. So then I say, fine, this is a great validation. So I just chucked my admission idea. Okay. And we said, here is the deal, let's start. So I started, and way back in April 2011, we were lucky enough to sort of get Sequoia interested very early on. When Sequoia invested, literally I was operating from my dining, no office, no employees, nothing. And that's the credit I will give to Sequoia, that the confidence they showed on 5 slides. Yeah. They put in $2 million check on day one. And from there on, the journey was very, very exciting. We ran the company for 5 years, raised almost like $25 million over 5-year journey. In 2016, when the Naspers folks met us, and the whole discussion started with around should we sell it, should we take investment? And Naspers had PayU, which are a competing entity. I think it doesn't make sense to sort of take investment from a competing entity. So we told them that either you buy us out or we are not taking an investment. And to our surprise, they said, okay, we are buying you out. So, and we thought that we will put this condition. That's a polite way of telling no.
Exactly.
And they just said, no, we want to buy you out.
Wow.
And that's how the deal happened. Wow. Frankly, we didn't expect that they will say this way. Post that, the journey has been equally exciting, I must say. One, because the whole Citrus PayU merger, we worked very hard to make it work, and today the company, which was the overall, which we were losing around $35 million when we joined the company, which is like Citrus plus PayU combined. Today we make $5 million profits.
Wow.
So it's a complete turnaround which happened in 2.5 years. Then we started a credit business, consumer credit business, Lazy Pay, which you must have heard of. Pay later business. Every youngster uses it nowadays.
It's on all
Swiggy,
the food apps,
Zomato, and all of that.
Actually, I think is the one I use.
So that has become one of the superb hit fintech product in the Indian market. So we launched, started that, and now scaled really well. So I think the journey has been like super exciting, and now I think it's time I move on to something next.
Oh, okay. Interesting. We definitely want to hear about that. But given this vast amount of experience in not just fintech, but even before that, like you said, your journey itself started with ICICI Bank. Is this what was your core insight which you really think led you to build like that whole the Citrus was actually one of the first gateways around?
No, actually we were when we started the company, there were around 10 independent payment gateway companies and 5 bank gateways.
So we actually very old ones.
But so we actually entered into a very crowded market, and literally not a rational person, not a single rational person told us that it's a good idea. So I went to banks, and banks said, "Are you mad, Jiten? I mean, why are you doing it?" We asked friends, family, and everybody said, no, this is like a one-off idea, one more idea. I mean, one more company in the similar space. Why would you want to do it? Right. And we said, no, it makes sense. And my bet was that the market is so big. Look at the internet penetration growth, look at the online user growth. I think in next 10 years, this market is just going to grow. So even if I am the 11th player and I don't achieve scale, I'll still create some value. So that was the hypothesis. It so happened that we became number 3 or number 2 player over 5 years, and I think it just worked out.
And the reason being what? Like, was it just the friction you were helping people avoid? Like, I know the space was painful to work with, right? It was, that's the one word I would use.
So I think you said it.
I remember when I was still doing a lot of e-commerce and that kind of the consulting in that space, that Citrus, when it first became a thing, you guys were one of the first people to integrate with Shopify really easily.
Yeah.
And besides that, so from an Indian perspective, I think that was there. And then also, a lot of the merchant control panels were really, honestly, quite crappy up until Citrus. So I remember that when Citrus became we started pushing Citrus as the payment gateway to all of our customers.
Wow, that's very, very heartening to hear. But that was the idea. We said that let's be more merchant friendly, who is our customer effectively for the company. And second, how do we simplify the experience both for merchant and consumers? So, a simple thing like card storage. So you are repeatedly using your saved card across websites or apps. This concept didn't exist. So we were the first one to introduce. And when we were introducing this concept, a lot of guys, the first question they were asking, does RBI allow that? And we said, there's no such guideline like RBI allowing, not allowing. It is just the security standards you have to maintain. So, there were myths in the industry why people were not doing it. And I think we just broke those myths. So I think the clear focus on simplification of engaging or availing a payment gateway service, simplification of pricing, simplification of the user experience. This is what we solved, and it worked out.
The pricing part was also actually really, really convoluted beforehand, right? I mean, you had to this much percentage of this and then add this for everything. And the Citrus made it a lot simpler. I remember
That's
that.
right. Yeah.
In fact, all of these components together didn't make it a entrepreneur-friendly business at all. It was like this one, you're starting a business, e-commerce or whatever, and I mean, I was also doing apps back then, and it was always that one payment gateway integration is the last thing you want to tackle.
So it was like a privilege to get a payment gateway, and we said this is not a privilege.
It used to take 3 months to kind of get the paperwork in place and stuff like that. And over here, when we go into Citrus, I mean, I remember a friend of mine, she had a sari store store that she wanted to start online on Shopify, and literally 3 days later, up and running.
Yeah.
Right? Whereas before that, every other time that we were trying to implement payment gateways for people, it's like, okay, you need this documentation. They'd come back, they'd give you a list of documentation. You provide that list of documentation. No, but you need this in addition to this, and this has to clarify this, and this has to become like this.
Has that really changed though? I still think it's like KYC and all that has not changed.
You're right, but the much of the processes has been improved, I would say, and I think the experience of dealing with those processes is much better because it's no more. It's no more whatever you say, the honor you are doing to someone by giving him the payment gateway service.
Right.
Rather, it's more of a services world where you sort of compete for the business. So I think people have become more practical that I need to give service, otherwise somebody else will give.
Yeah, or the people will switch. In fact, given that you were also in the fintech finance side of things, and Amrish also was from a core finance background, were you able to, in your entire journey, not just now, not just previously, maybe even through PayU, do you see that you've sort of helped change happen on the regulatory side?
Yeah, that's an interesting question. So definitely, I think the finance background helped a lot in many things. So one, so since you asked specifically on the regulatory side, I've studied law as well. So so of course, interpretation of guidelines, thinking through what are the best ways to navigate through those guidelines and launching your products being in a compliant manner, it really helped. The discussion with RBI or other regulators became much more easier for us because we were able to sort of interact at the same wavelength.
Yeah, speak their language basically. Yeah.
So I think that background really, really helped us.
Yeah, because that's again something now, of course, there's a sort of a level playing field in a way, there's so many people coming into fintech and doing so many new things. But back in when you were in that 11th player,
I said trust, right? So the trust part, because the banks didn't want to deal with one more player, the merchants didn't want to deal with one more player. So I think when we went to the market, we already earned trust because of our ICICI or First Data background.
Right, and of course, and that I think it's a good catalyst to have in any journey, right? Coming to the actual, of course, how many years was it between your founding Citrus to the acquisition, like life over journey?
Exact 5 years.
Exact 5 years, and those 5 years were actually a very formative 5 years in the Indian startup ecosystem also.
That's right,
Right? 2011 is when, what, Flipkart was just like coming up or something, right? E-commerce or buying online was just becoming a thing. To 2016 or 15, when it was like, it's like
booming.
The boom, the big boom, right? So obviously you work with merchants, you must have seen like the ecosystem around you just blow up in that sense, right? In online commerce. What was your, what learnings did you have? Could you share some insights on the journey there?
This was,
merchants?
so I think this was like very, very interesting experience which we had, considering we were more of an infrastructure play around this whole e-commerce boom. So we used to read newspaper every day. Okay, this company got funded because this company does 50,000 transactions a day. And we were like, hold on. I never saw more than 5,000 on my platform. Where are other 45,000? So we were actually able to see who's lying what. So and in our office we used to actually make fun. Okay, wow, man, this is the best way to raise money.
That is, we've had sorry to interrupt, but we've had the same thing happen in podcasting space. I see people lying so blatantly about numbers sometimes, and I'm just like, man, how do you get away with this, right? How do you think that? And then I was just like, okay, you know what? It's good marketing, I guess.
I don't know whether it's a good marketing, because when you fall flat, nobody comes and supports you.
True.
That's true.
So we saw, businesses rising, we saw businesses falling, we saw founder behaviors during rising time, during falling time, and of like not one company. We saw like almost like 30, 40 funded companies rising so fast, falling so fast. And we were unbelieving. I mean, we were so in a shock that how can these things go so wrong when the companies are so fast growing? And I think in a way, I would say we use those learnings for us.
Right.
That how things can go so wrong. If you scale too fast, if you burn money too fast, if you don't care about capital efficiency. So I think that was, one of the biggest advantages which Citrus had. Like our first fundraise, $2 million, we survived that $2 million for almost 30 months. So our second fundraise happened after 30 months.
Yeah, double of the usual 18 almost.
No, nowadays only 3 months. Or maybe 3 weeks. So I think that really, and I think that learning of, or that real-time learning, I would say, of that how other founders are blowing up, it really sort of kept us more real, more grounded, and more capital efficient.
Wow. And of course, being in the business of money, you of course had to be capital efficient, I presume. But it also, that brings me to the question of the domain itself that you chose, right? You're, unlike others where I think the game was valuation, or the game was, whatever it was for each kind of company that actually worked and didn't work out. For you, being a proper infrastructure player in finance means, you were a revenue generating business, but your revenues were all from volume and like a very micro percentage of what the kind of fund flow that you were seeing, right? And that's always been one of the things I used to think about payment gateways, that unless you are one of the biggest, you hardly make any money.
So you're right in some sense that at a scale these businesses make money, but these businesses, you need to understand, also have a very, very high operating leverage. In the sense, you sort of have a fixed cost, which is your server cost and people cost to some extent. But as more volume grow, they are the most profitable businesses. That's why every e-commerce company nowadays, or every taxi company nowadays, want to become a payments company too. So I think people realize it late, but we said, why do other businesses first? Let's do this business which makes money.
Right.
So I think that was a thing.
Also, I think you have lock-in, right? I mean, like once you have a customer who is using your particular platform as a payment gateway for their particular thing, they don't want to move unless there is like a really, really important reason to move, right? Because it's just it's a pain. It's a massive pain point. Your customers are used to a certain checkout flow, and you don't want to change that. So I mean, like I think also helps with these kinds of businesses.
That's right.
Yeah, it's infrastructure, and again, it's cloud infrastructure. So I mean, now everything is cloud infrastructure. That's why you have once you fit in with, let's say, AWS for that matter, right? You don't move out of AWS or so on and so forth.
Though I will caveat that. I would never lie that we didn't chase valuation. So I think in 2015, when this whole mad world was going around, that even a 2-week-old company raising 10 million, and the second raise was happening at 5x the valuation, all, we were like, we have been in this space for 4 years. We can do the same thing. So we did our bit. Unsuccessful one though, but we did our bit of launching consumer side of the businesses, and tried getting some attention from investor base, saying that now we are a consumer company too. We are just not an infrastructure company, but I don't think we got any success there. So but I think the good part is, we were not a 23-year-old founder or a 22-year-old founder, so who didn't realize that what is not working. And we realized that much sooner, that what is not working, and that saved us from any madness of going belly up. And I think like when we started focusing on our consumer businesses, which within 6 months we realized that things are not working. So why waste money here? So let's just take tough calls, hard calls to shut down those business lines and move on to what we are doing better.
Right. No, and of course, and that's of course what eventually led to, of course, that whole acquisition. And so coming to that time, like when that happened, and of course, I think it at the time also, or even till date, it's one of the larger acquisitions that have happened. $100+ million is not something you see every day. And you said yourself that it was literally a number where you said, let's say this so that they can say no, but they said yes instead. Do you think it should have gone higher?
In hindsight, you always feel so. But I think you take the call point in time. So I think at that point in time, we felt that that number was right. And second thing, I think you need to strike a fine balance in terms of, because ultimately we really wanted to make this merger successful. Because, anyway, the failure rate in the ecosystem is so high of all the M&As and, the bad feeling acquirer has. We said, let's make this work. Let's make this ideal. Yes, we were thinking ideal, but we said, let's make this ideal M&A.
Yeah.
And I think today Naspers says to the world that this is one of the best M&A we have ever done. So I think that is what we feel proud of.
Yeah, that's awesome.
On that note, I think we're going to take a quick break, come back and talk some more.
Hi, everybody. Welcome to another great week on the IVM Podcast Network. If you're not following us on social media, please make sure you do. We're IVM Podcast on Twitter, Facebook, and Instagram. On our social media, one of the things we do is if you send us a screenshot of what you're listening to, we will repost it on our social network so that people can see that what people are listening to. Put us some comments and we'll respond to them. Also want to let people know that we're still hiring. We're looking for producers, content creators, audio engineers, developers, designers, and business roles, and basically all kinds of other things. Go to the careers page on ivmpodcast.com or send us an email at careers@indusvox.com. Wanted to announce 2 new shows that we are starting, Tech Careers in the New and Agla Station Adulthood. Tech Careers in the New is a brand new podcast presented by Accenture. It's hosted by our very own Shiladitya Mukhopadhyay, my co-host on Shunya 1. On this show, he's talking to Accenture leaders about the latest and greatest in the world of technology and gives exclusive tips on technology careers, how to grab opportunities and stay relevant. Watch out for fortnightly episodes on Wednesdays starting July 3rd. The other new show that we're launching this week is an exciting show called Agla Station Adulthood, where best friends Ritasha Rathore and Ayushi Amin ride through the various stations of life. Whether you're in your mid-20s, just entering them, or about to cross into the next decade, tune into this fun show. On the Scene and the Unseen, author and researcher Manu Pillai returns, this time to have an in-depth conversation about his new book, The Courtesan, the Mahatma, and the Italian Brahmin. They discuss an extremely wide range of topics from Italian sages to Gandhian principles to what India would have looked like without the British invasion. On Keeping It Queer, Naveen and Farhad are joined by our producer at IVM and stand-up comedian Abbas Moment to discuss straight pride. Continuing our producer special on paperback, we have our producer Madhuri Advani talking about storytelling and her intervention into various spaces through stories. On the Edges and Sledges cricket podcast, DJ and Varun discuss the match between India and Afghanistan and delve into a deeper conversation with Michelle St. Patrick Hewitt from West Indies and James Butler, host of the Cricket Badger radio show podcast. On States of Anarchy, writer and columnist Devika Kher joins Hamsini to talk about the lack of jobs the world over, the gender disparity at workplaces, and the possible solutions to them. On the Pragati podcast, environmental researcher Lingaraj Jayaprakash joins Pawan to talk about climate change, air pollution, and the looming water crisis. On The Origin of Things, Chuck narrates a story of hills, college memories, and deadly encounters. Will you be able to guess the brand before Chuck reveals it? And with that, let's continue with your show.
All right, welcome back. Since you're here again, someone who has a unique insight into how these things play out, and of course you've been with PayU, you've also rolled into the operation side of it. What can you tell us about how this actually happens? Because see, startups and founders, this is like a dream to be have an exit and so on, and so few of them have happened. How does it actually play out? Because I also know that you guys had given ESOPs to employees, right, and those ESOPs also paid off really well for people. So tell us some of the good things that happened to not just, of course, you and everyone, the founding team, but also everyone else around. And how did that come about?
So I think, first of all, my advice to the founders is don't think about exit. Mm-hmm. I mean, because I think in India, this is the best time to build a business, and longer you stay put, the better returns you get. So this is the hindsight learning I'm giving.
Okay.
So,
okay.
But I think these discussions sort of you never time your exit. So when these discussions come up, you got to be smart enough to pick up cues. You got to be smart enough to sort of evaluate that how your business is going to pan out in next 3, 4, 5 years, and what kind of capital you will need to support that kind of growth, and considering the market situations, considering your own abilities, considering your existing business line, whether you can do it alone or whether you have to do it with someone else. And I think so these are like there is no real science behind it, but these are the calls you take based on the very, very subjective assessment.
Right, including the people on the other side.
Yeah, including the people on the other side. And the second thing, our thinking was that the money which we raised from investor, we have an obligation to return.
Right.
And in Indian market, you don't get liquidity events too often. Right. So we said, we have got liquidity event. We have raised money, we have to return the money. Then we've got people who sacrifice their time, salary, everything. And, there's a beautiful time to reward them. And then, of course, we were holding 50% of the company. So we're like, this is a good opportunity to make money yourself as well. So so I think all of those factors really sort of helped us in deciding that what is the best call for the company. Yeah. And I think we debated this a lot with our investors in terms of this is the way we are thinking. Do you think, considering you guys have seen more than us, do you think is the right way of thinking? Do you think this is the way we should consider a decision? And I would say that our investors were so supportive and good that they helped us debating question answers and all, but ultimately they left the call to us. Right. So neither they were in hurry to sell, nor they were saying that, nor there was any argument saying that no, you are wrong and all of those kind of arguments. Right. So it was a very, very inclusive consultative approach which we took. And I think maybe I will take the same decision again if I go back in that time. Right. Without knowing what happened after that.
Right.
So I think that way I don't have any regret.
Yeah. And it's the same process. So what you're saying is, if I'm hearing right, is as a role to play all these people, not just you as a founder, you had a responsibility to your team, investors alike, but at the same time, even your investors
to your
were
families
equally,
as well, right?
Yeah, and of course, and your investors were equally supportive of your decision.
That's right.
And going forward, you now, of course, from that large acquisition, you have become an angel investor. You're also giving back to the ecosystem. So are you seeing that sort of relationship with your angel investment founders as well?
Oh, definitely. I must say this is the best time to be angel investor in Indian market, because the quality of founders which you are coming across, I feel dated. And I'm like, wow, man, these guys are so smart, and the businesses, the way they're executing, I don't think I have the ability to execute in the same manner. So I think there are two, for me personally, my motivation of investment is not just for profit, but also to sort of remain connected with the ecosystem and learn from those founders. It's kind of a tuition fee, right? Yeah. So I think that's and what I can give back to them, while I cannot give them a business advice, but I can give them the advice on how to build teams, how to sort of think about decision making when it comes to critical decision making, how to think about dilution, how to think about if a strategic partner comes to you, what kind of conversations to have, what kind of giveaways not to do. If an investor put in some onerous condition, what not to agree. So I think all those kind of founder-to-founder discussion, I'm able to help at least my portfolio companies. And I think, okay, at least on my face, my portfolio company founder says that, this is what we love the most. I don't know what they say behind my face.
No, definitely. And you've been part of quite a few. Can you name a few of the interesting investments that you've been a part of, and some companies?
So I'll name the one which is announced yesterday, Bank Open, where we seed invested, Amrish and I, and now that company is valued at almost $160 million. And we invested literally at paper plan stage. So that's
the company that's doing stuff where
SME banking platform.
Banking, right?
Yeah.
Yes, right.
Then I have been invested in this company Helo5, which is a parenting platform. I have been invested in heard of Purnia pop-up shop. Yeah. So that brand.
Wow, that's a very
different. Yeah. So I think I'm invested in Bira, by the way.
Of course,
I am invested in a meat delivery company, though I'm a vegetarian. So I think so So there is a one underlying thesis because you see, such varied, but what is the underlying thesis?
Yeah.
And the one underlying thesis is that the founder and the team. So all of these guys either were known to me in my past interactions or life, in the sense I have interacted them as a client or as my employees or as my colleagues in my work life. But at the same time, these were great guys. These are great guys, in fact, who have proven them in the work life. Now they're proving in their startup. So I think that is a common connection. So it is not randomness by any chance. It is just that these guys, I have known these guys, or they have come through very, very strong reference, which I can trust. So that has really helped. Though I have invested in weird stuff as well. So it's like I used to own a poker team.
Oh, wow, really? Okay.
There used to be a poker league. And,
there still are a couple.
Yeah, I think there's still. So I used to own one team there.
League, which does televised matches. There are a couple of leagues around.
Yeah, so I was in the one where the Mohit Burman, the Dabur guy.
Yeah, okay, all right.
Yeah, so PSL. So I did that. Within a year, I realized that it's consuming too much time than what I thought to be. I took it for fun, but it sort of became a serious business. So I said, no, that's not my cup of tea. Though I invested in one racing league, streetcar racing league.
Really?
So one of the learning was that don't be a player, become a casino. So I got to invest in this racing league, which will conduct the streetcar racing, and they got the customized cars and all. They got the permission from BMC and all of those to run the street. So they're launching their first street racing in November this year.
Okay.
So
where are they? What are they going to use as a track? Streetcar, so I'm guessing it must be like local roads, right?
Yeah. Your New Bombay, Palm Beach roads, and your Noida and all of those kind of stuff.
Wow.
So that's one very, very interesting investment, which I'm like really excited about, because this is a new concept. The team is but amazing. They've proven it in the past, and they're doing it new concept, but doing it in this sector. So that's one. Then
you'll be called the Fast and Furious investor.
But you know what? Fast and Furious reminds me of my recent investments. There are like 4 or 5 companies which I recently invested. I'm yet to wire the money. But there's a next round happening at 5x, 10x. And I'm like, what's happening? Really, what's happening?
You have seen this before.
Yeah. And... but that's what I would call fast and furious in the investing world, right? The way things are moving. I think this is the best time to be investor, best time to be founder, to run the company.
Wow, that's interesting. And I think this time around, at least, hopefully we are building on a foundation of, like you said, founders are smarter. There's a lot of total learning and knowledge in the current crop of founders and investors like yourself. So I think the learnings are definitely stronger. The foundations are stronger for whatever big valuations we are going to see coming up now. But as a quick, like from the journey you had to a personal angel investor, and of course you just mentioned that you grew the PayU India business to profitability in this while. How has it been for you to see the Indian ecosystem change? And if you were to do something else, and you said you're on the journey to do something else, which we'll soon hear about, which direction are you going? Are you still going to be in finance, or do you want to talk about what's interesting for you, given that you've seen so many things?
So I think, I was reading Jack Ma quote, which said that between 30 to 40, you experiment as much as you can. I think I'm approaching 40. So he said that after 40, you should do what you know better. So since I'm approaching 40, I decided to do what I know better, which is fintech. So I'll be doing another fintech venture, still hashing out. So very soon I'll be coming back first to you guys to announce through this podcast.
We shall talk about it again, yes.
So it will be a fintech venture for sure. And I think the way I'm seeing the ecosystem, why fintech? I mean, a 1.3 billion population, while not each person in the population can be addressed by any single company, the good part is there are segments which can be addressed, be it the SME credit segment, be it the SME automation segment, be it the consumer credit segment, be it the consumer wealth management segment, be it the how do you optimize your savings and all of those kind of stuff. So the scope of this industry is so large that you can make enough mistakes. Second, this is not winner take all. So in India, there are still 70 banks, and each of the banks is doing very, very good on the retail side.
Yeah.
So I'm saying even if there are 200, 300, 400 fintech companies, each of them still can get enough pie, enough revenue, enough market size for themselves, create enough niche for themselves.
Why do you think fintech isn't winner take all? Like most internet businesses kind of do go into a winner take all system, right? Why do you think? Is it just the population size, or?
So in India, I think one, it is a factor of population, and second, I think that India is such vastly distributed demography wise in terms of the need, the way they consume or understand financial services, the availability of data, the digitization and all of that. I think there are so many nuances around this. That's why I feel that each segment can be addressed specifically.
Okay.
And each financial services business line itself can be addressed specifically to a particular segment. So there are, it's like those multiple combinations multiply by multiple combinations. So multiple combination in terms of the segments and then multiply by multiple combinations of businesses.
Services that you can provide.
So I think the immense opportunities open up.
Interesting.
And funnily enough, a lot of these ideas are also novel to India. It's not just that, we are taking something from a mature audience in the US or Europe or something like that and now bringing it to the financially able audience of India. It's not that.
So I'll give you an example of this company, let's say Khata Book. So since, just to sort of build on what you just said, like, in Indian households, you have this habit of calling a Kirana store and say that send me this XYZ. And then that guy records and sends you the bill at the end of the month. Right. Now, they record it in a book. Now, the book gets lost, or maybe they forgot to write or whatever. And so this Khata Book came out with this app where they're saying whatever the cash transactions you're doing, well, digital are getting recorded.
Right.
But you're exchanging cash as well. Yeah. What if I give you the digital ledger? What you're doing in your book, do it in the app.
Yeah.
Okay, I have to collect $10 from Shiladitya and $500 from Amit. So you just write there.
Yeah.
I mean, just now that is generating so much of sales data about a particular retailer, which is simply not available, right?
Yeah.
And that is not valid in Europe. That is not valid in US. That those kind of business models not valid in Singapore.
Yeah.
So I think interesting ways the way people are thinking to create business models. I mean, you look at Bharat Pay, right? While Bharat Pay sort of more operates on a Alipay, VPay kind of concepts where they just paste QR code, people are using scan and pay and all of that. But a year back, if you would ask people that, in India, people will scan QR code and pay, people would have laughed off. Yeah. Okay, it's never going to happen.
Yeah.
It's happening.
It's happening.
There are more than 3 to 4 million transactions per day happening on QR code scanning.
Wow.
At retailer locations.
Wow.
So the new way of people interacting with finances, payments are emerging, and which is where the new businesses are getting created.
Lovely. I mean, I'm really happy to hear this again, especially QR codes. I know personally, I've tried to sell this maybe 7-8 years ago, but I think the time is now, and of course there'll be more and more newer models. Of course, do you want to do like a shout out to people who might want to?
Where should people send their business plans to?
Yeah, or maybe join your new fintech venture at some point. How can they reach you? Like a Twitter handle? What's your preferred mode?
LinkedIn is the best way to reach out to me. I respond to every message I get on LinkedIn. So I never miss that.
Amazing. How many requests do you have to add people?
Oh my God. Daily I must be getting at least 200, 250 requests.
Wow.
But I accept each other than the recruiter ones.
I have the same philosophy for LinkedIn. My thinking around LinkedIn is that it's about expanding your network, right? Yeah. So why do I need to be so particular? I feel Facebook you should be particular. Yeah. LinkedIn you should be indiscriminate.
Right. I agree. Yeah. And it's a professional network. You're not sharing any personal info anyway.
I mean, it's very helpful, right? I've gotten a bunch of meetings out of LinkedIn, which I would otherwise have been really tough to get, right? I'm like, I search for somebody, find a common connect, and then just say, hey, can you introduce me to that person?
So I think we are advertising for LinkedIn.
Yes, yeah. Well, LinkedIn
But
needs
that's
to
a real
advertise.
reality.
It's true.
No, I never liked it before. Then I got into sales, and now I know how powerful it is.
So in Citrus, in fact, my first 10 hires were through LinkedIn.
Oh, really?
So I must have made like 150 to 200 cold invitations, attempts to reach out to people. 30, 40 responded, and 25 odd agreed to meet in person.
And then
hired 10.
Yeah. Nice.
So I think I really am an admirer of LinkedIn.
Powerful message there. So guys, if you don't ignore LinkedIn, even new people who want to join a startup, it's not for just boring old people like us.
No, it's not.
It's also for finding cool talent. So great, Jitendra. Thank you so much. This was so amazing to listen to. All the insights that you shared. I think. And it was a great way to sort of wrap up our 99th episode. And of course, we hope you can join us for number 100 also, which we'll be talking about and announcing soon,
yes.
Which will be a live podcast. And of course, then we'll be back with something new, hopefully in the 100 plus, in the 3 digits.
And just a reminder, guys, please do give us a rating or review on iTunes or wherever you're listening to this podcast. That does help us. It kind of makes sure that people find out about the show. And if you'd like to join the Slack channel, go to ivmpodcast.com/Shunya1. There is a link over there saying join the Slack channel, send us your email, and Abhijit will send you an invitation.
Absolutely. Thank you so much for listening. We'll be back soon. Thank you.
Thank you.
Hi, I'm Vishal Gondal, an entrepreneur. I've had the chance to meet and understand how some of the super achievers have hacked their way to success, and they have done spectacular innovations. Now I take a closer look at these people's lives to find out what lies beneath the force, only on the Vishal Gondal Show. Episodes out fortnightly on Wednesdays on the IVM website, app, or your favorite podcasting platform.
Hi, my name is Anupam Gupta. I'm B50 on Twitter. I am the host of Paisa Vaisa, the show that talks money. On my show, I speak to experts from every field of money and finance, from stock markets, equities, debt funds, credit cards, life insurance, every possible area of money and finance that you can think of. We even did an episode on cryptocurrency. I've got fantastic guests from mutual funds to personal finance experts everywhere. Robo-advisory, startups, just name it, we've got it. At Paisa Vaisa, we help you make smart decisions about money. You work hard for money. Now make your money work hard for you. New episodes out every Monday, and you can listen to my show on the IVM Podcast app or any other podcasting app that you have. Paisa Vaisa is brought to you by Paytm Money.